It wasn't very long ago when many investors were leaving Victoria, mainly because of land taxes, stagnating property prices, and policies which were not favoring the landlords. But something strange happened in 2025, especially the second half of 2025. The sentiment started changing. More investors were slowly starting to look at Victoria. Victoria was slowly starting to pick up. And in this video, I'm going to break down what's causing this shift, and then I'm going to talk about 6 regional Victorian markets that you should keep on your radar. Hi, for those of you who don't know me, my name is Jadu Srikandan. I'm a buyer's agent for property investors, and I buy properties all around the country using a data-driven approach. So if you want to work with me, then go to my website, Property Framework Buyers Agency .com.au and book a session with me there. Now, we're going to dive into the real story behind the turnaround in Victoria, and then I'm going to tell you what's happening in these markets, like not from a data deep dive perspective, but what's happening on the ground and what I'm seeing on the ground in these 6 regional Victorian markets, where the markets are too hot and where there could be opportunities. So whether you're a first-time investor looking to get into the market or someone who's looking to buy their second or third investment property, you'll definitely find some value in this video. So please keep watching. Let's start with sentiment. In 2022, only 9% of investors said that they would invest in Victoria. In 2023, it was 11%, okay? But by Q3 2024, that number jumped to 25%. Okay, so there's clearly a shift in that investor sentiment. And so what has changed? Let's look at what has fundamentally changed there. The value is back, right? Victorian markets have been flat since the COVID boom. Like nothing was happening in terms of property values, whereas other markets like Queensland, Western Australia, South Australia, they were moving up rapidly in value. So you'd find that these properties are somewhat undervalued, and there's opportunity here, especially to buy under 500,000. Number 2, economic performance. In the latest CommSec State of the States report, Victoria ranked the second best performing economy. Okay, so this was the December 2024 version. Victoria moved up in the ranks and was the second best performing economy in Australia. So something's changing there. And number 3, the rate cuts that's about to happen. Historically, markets in New South Wales and Victoria have been sensitive to rate cuts. Whenever there's a rate cut happening, or when there's going to be a series of rate cuts, these markets are quite price sensitive and often they tend to move up in value. So that's why there's more opportunity in these Victorian markets. And that's why the investor sentiment has been shifting. So since January 2025 or earlier this year, I've started slowly transitioning out of the hot markets of Queensland, Western Australia, and gradually started moving into markets like regional Victoria. Partly because a lot of these Queensland markets have doubled in value over a very short time window, whereas these Victorian markets, they've had some breathing space. They've had time to relax, and now they've started their recovery phase. So there could be more opportunities that could come up here. And that's why I'm starting to look more into these Victorian markets. Now, let's get into 6 markets which I want to break down one by one. Now, the first one is Bendigo. Okay, Bendigo not too far away from Melbourne CBD. Now, in Bendigo, the market is actually comparable to boom towns in Queensland and Western Australia. It's really hot. We're seeing multiple offers for properties on the ground. There's competition from first-term buyers, investors looking to buy, and a lot of buyers agents. Property prices are easily going 30,000-40,000 above the top end of the asking range. So it's very, very competitive. Okay, so if you're looking to buy in Bendigo, you can still buy something around that 500 to 550,000. You can find solid brick homes. These are older homes, but they're good quality brick homes. And the suburbs that you should be looking for are suburbs like Long Gully, California Gully, Kangaroo Flat, Golden Square, those type of suburbs. Now, I'm just going to show you an example of a property in Golden Square. Now, this is a property in Kangaroo Flat. So it's not Golden Square, it's in Kangaroo Flat. This is 27 John Street. So you can see this is a solid brick home. Okay, it's a bit old styled, but still it's solid, and it's on a decent sized block of land. So this property sold recently for $550,000, and it could potentially rent out for $480 per week. Okay, and if you're on a tighter budget, and let's say you got only 450,000, you can still buy these weatherboard, the old style weatherboard homes in suburbs like North Bendigo, California Gully. So they could do with a bit of upgrade, but then even in its current condition, a home like this could still be rented out. So this was recently sold for around 440,000. It has a decent sized block of land, so it's about 600 meters squared. You can buy it for 440,000 and probably rent it out for around $420 per week. So these are the opportunities that are showing up in Bendigo. Personally, will I invest in Bendigo? Well, I think the market is very hot. If you had come here 6-7 months before, you could have you could have bought at a good price. But right now, you're going to be overpaying for property. You're going to be competing with a lot of people, and you're going to be overpaying. So probably not the best choice unless you're looking for growth and okay with a bit of competition. Now let's look at the second market. Now I want to talk about Mildura. So Mildura is a smaller regional town, but it's been doing pretty well over the last few years. Like even after that COVID phase, it didn't stagnate. It was slowly and steadily moving up in value, and it started picking up really strongly over the past 6 months. So you can find brick homes here for under 450,000, old style brick homes for under 450,000. And then in Mildura, they have something called Conite homes, which is made up of fiber cement material. It's very popular in the Mildura region, and these homes are actually more affordable as well. You could pick up something like this for under 400,000. So I'm just going to share a home in Mildura. So this is number 20 Leonard Street in Mildura. This sold for 355,000 just in April 2025. It appears to be a kind of Conite and a brick kind of material. So it's a decent looking house, 355, and it could rent out for around 380, 390 per week. So not bad in terms of rental yield. You can get 5% rental yields in Mildura. There are also surrounding suburbs in Mildura, right? Red Cliffs, Merbein, where you can find properties for under 450,000 as well. So these suburbs are pretty close to the Mildura CBD, short 10-15 minute drive to the Mildura region, surrounding suburbs which have potential as well. So if you're looking at Mildura, you could also look at these couple of other suburbs like Red Cliffs and Merbein. So Mildura, really affordable, has really strong rental yields, 5%. So if you're after good rental yields, you can come here. But the problem again here is because of the affordability, because of the strong rental yields, investors and buyers agents are already in this market in huge numbers. So there's a lot of competition. You're going to be overpaying over the top end of the range for properties. And well, if you don't want to overpay, then don't go to Mildura, okay? But there's still opportunity here. And if you're on a tighter budget, it could still work. Now, let's move to the third market, which is Shepparton. Now, Shepparton is not as hot as a Bendigo or a Mildura. What I'm seeing on the ground is properties are still going within that asking price typically. Depends on the type of property. So if it's a slightly older property, it'll go somewhere in between the range of the asking price. If it's a good property, probably towards the higher end of the range. That's what I am seeing on the ground. But the problem I'm seeing with Shepparton is that most of it falls into a flood zone, and that's what you have to be careful about. When you're buying in Shepparton, avoid the flood zones. And when I check through properties in Shepparton, at least 50-60% of the properties fall into flood zones. So there's a significant portion of properties which are immediately ruled out. So you have to be careful around that, but you can still find properties around that mid 400s to 400s. You can find brick homes in good quality condition and which have a decent sized land as well. So I'm going to share a property which in the Shepparton region. So this is a 3x1 in Shepparton. It's around that 600 meter square block. decent inside. Price was $445,000 and it rents out for about $450 per week. And this is away from a flood zone. So Shepparton could be an opportunity. There's not too much competition, but it's going to start picking up very strongly. But you just have to be very selective about the property, okay? Buy away from flood zones, buy solid brick homes, and around that 450 to 500, that is what you should be looking to buy. Let's move to market number 4, which is Geelong. Okay, now Geelong is very close to Melbourne, okay, well connected to Melbourne. Big population, much bigger economy, and under 550,000. I'll be looking at 3 suburbs. So there's Corio, there's Nolane, and there's Whittington. So these are the 3 suburbs that you could buy properties for under 550,000. But one of the things that I would be very careful of is that in all these suburbs, especially in Nolane, you'd find high renter pockets and areas with high levels of public housing. So I'm just going to share this screen with you and show you. This is data from OpenStats. So you can see Nolane here. The red zone here, so this is Nolane. The red zone here indicates high renter populations of, more than 35%, and then high public housing about 25-30%. So ideally, if you don't want something like that, then you should be avoiding these kind of pockets and then buy into these green zones, which are higher in own occupiers and lower in public housing. Again, in Corio is better than Nolane in the sense that there are some very good pockets in Corio where you have strong own occupier appeal, very low levels of public housing. And so if you were looking for that area with a good family appeal, which should be looking for as an investor, then I would buy properties in that Corio pocket with low public housing and own occupier appeal. I'm just also going to zoom into Whittington now, which is just around the Geelong CBD area. So this is Whittington. Again, in Whittington, you can see there are these red pockets here, which have higher renters and a bit of public housing as well. So be selective about the type of property that you buy when you're looking into these 3 suburbs. Having said that, just because it's public housing, it doesn't mean there's anything wrong with that. It's part of housing in Australia. And of course, you can buy something really affordable in these areas, okay? But if you're looking for some strong family-oriented suburbs, and I would target areas in Corio, something like this. This is in a pocket with about 60-70% own occupiers, very low level of public housing. This sold for around 485,000, solid brick home, potentially would rent out for around 440, 450 per week. So there is plenty of opportunity in suburbs like this. So what's the good thing about Geelong? I would say it hasn't got that steam that Mildura and Bendigo has. It's a much cooler market, but this market is going to turn within the next 6, 12, or even 18 months. So get in early into these markets. The only downside I see is that rental yields tend to be a bit lower, around 4%, 4.2%. So you just have to be taking note of that. Now let's move to the next one, which is Ballarat. Okay, now Ballarat is also a cool market, and if you're looking for under 500,000, there are plenty of suburbs. You have areas like Sebastopol, which are picking up very strongly, Redon, Wenduri, Delacombe. So these are the type of suburbs that you should be looking at. You can find good quality brick homes, older homes again, on decent sized blocks of land. Now I'm going to share a property in Sebastopol, which is number 49 Roland Street. So this sold recently for 460,000. Rents could be around 420, maybe $400 per week. So yes, rents are a bit low in Ballarat, but of course you can still buy properties within that asking price. You don't have to go above the asking price, pay some crazy amount to secure the property. Okay, so that's the advantage of getting into markets like Geelong and Ballarat. One other thing is that, Geelong and Ballarat over the last 3 years, they were actually going down in value. So they dropped by about 5 to 10%. So the property prices are much lower than their 2022 peaks, right? So they're going to come back to that value and then start going up further. So there's more opportunity and room for growth in these markets like Ballarat and Geelong. Now, one of the concerns, I guess, as an investor is the cash flow when you get into markets like Geelong and Ballarat. So that's why I wanted to show the cash flow for you. So this is a property if you purchase at 480,000. Let's say you buy something in Geelong for 480,000 and it rents out for 420 per week with a 6.50 interest interest rate, a 12% deposit. Let's factor in our expenses. So property management fees, there's insurances, council rates, a bit of land tax as well, and then the water as well. So total rental income is 21,840. Total expenses 35,000. The first year at a 6.50 interest rate, you are negatively geared by around $13,000 per year. But that significantly improves. Once the interest rate goes to 6%, it becomes 10,000. When it becomes 5.50%, that becomes 8,000. And if by any chance it drops to 5%, then it becomes $5,200, which is really manageable. So yes, the interest rates are going to get cut. So think about that. You're not always going to be very highly negatively geared. And then look at the capital growth. Now, year one, the property moves up by 6%. By year one, the property is valued at 508. By year five, the property is valued at 642,000. So 480,000 property valued at 642,000. That's an uplift of around 160,000. And that's really what investing is about, investing for capital growth while making sure that you can manage the cash flow. So if this cash flow is manageable to you, then definitely look into these cooler markets like Geelong and Ballarat instead of competing with other investors in these hotter markets like Bendigo, Mildura, for example. And finally, let me talk about the last market, which is the Latrobe region. Okay, so Latrobe has 4 different big cities. So that we have Traralgon, Moe, Morwell, and then Churchill. Okay, so this market is really, really cool. So when I say cool, you can negotiate hard. You can get properties about 10-20,000 below the lower end of the range. Okay, the lower end of the range. So the properties sit on the market for like 2-3 weeks. So it's a very cool market that I'm talking about, right? But the good thing is that you can buy properties here, and I'm talking brick houses. You can buy brick houses under 400,000 in areas like Moe, Morwell, Churchill, and under 450,000 in areas like Traralgon. Okay, yield also is around 5%. Okay, so not a bad rental yield. Okay, but the only downside is that stock is really high, inventory is really high. There's hardly any competition there for properties, and so you're not really going to see any short-term growth or any price movement over maybe the next 18 months or so, right? So if you're someone who's prepared to wait, get something under market value, negotiate and get something under market value, and are prepared to wait for that growth to happen, then yes, definitely look at the Latrobe region. The region is also economically quite diverse. The unemployment rates also have been dropping, so you could look into a region like this. That's what I'm seeing on the ground. So I've been talking to real estate agents in all these 6 markets, and I know the speed at which these markets are moving. And that was a bit of insight into what I'm seeing on the ground. This wasn't really a dive into the data. It's more around the perception of what's happening in these markets. Okay, let's summarize this. Where would I be buying right now? I would skip the hot markets of Bendigo, Mildura. Okay, because too much competition. I'll focus on cooler markets like Geelong, Ballarat, and maybe even Shepparton, as long as I'm selective about the property. And then also, if I'm on a tighter budget, if I'm happy to wait out for the growth to happen, I would select the Latrobe region to invest in. That's a summary of all these 6 market, guys. And if you're an investor looking for data-backed property recommendations, so someone to guide you through the whole process, then book a call with me and I can guide you, explain to you what your different options there are, and get you into a good solid market. So that's all from me today, guys. I hope you found it useful. Please like and subscribe to the channel. And I would also love to see which areas you think are good in regional Victoria. Put that down in the comments and I'll reach out to you again. So that's all from me. Thanks.